Hello, everyone, and welcome to another Wall Street from Main Street podcast. Today, we have a first-time guest from the Day Trade Show. His name is Don Harrold. Don, welcome to the show.
Well, thanks for having me, John. I appreciate it.
No problem. It's good to have you on. I've been following you for quite a bit, and I actually found out about you through a mutual friend, Rahul from Alt Investors Hangout. So we already have one thing in common. We've both been interviewed by Rahul, and both interviewed Rahul. I actually interviewed him myself, so we actually had something in common before this. And why don't you tell everyone about yourself as just a brief introduction if they have never heard you before?
Okay, well, let's see. I'm not college educated. I'm better on a guitar than about anything else. I think I'm good with numbers and mathematicals. I like to talk about stocks, money, all sorts of stuff, freedom related, and I'm generally not as handsome as I was when I was in my 20s and 30s, but more handsome than I'll be in my 50s or 60s.
All right. Well, not being college educated, that actually, for a lot of our viewers, would actually be a plus. Some people actually say you haven't been brainwashed in the government schools, so that actually is viewed as a plus.
It wasn't for lack of attempting. I mean, I attempted a couple college experiences, and I mean, the first college experience I had, I did a little bit too much fun. The second two, I thought, well, I'll buckle down, but then I realized, you know what, I don't want to do this, and so I just didn't do it, and went out there and got educated on my own.
Yeah, self-education. So I was going to say, let's get into the first topic, which is your what sort of, well, that's what I listen to you mostly is silver. Right now, it's been, from what I've seen, it's been stuck in this range for about a year of 19 to 21, and once it's 21, it goes back down to 19, and it just bounces out. What do you see right now in silver?
Well, I think I see the obvious that the first thing you do is you look at the chart and say, look, it's at 19.5, which is actually a kind of a completely mind-blowing number, because this was a number, not only were we never supposed to see 40 ever again, 30 was laughable. 20, I mean, I had people tell me that 20 would never again happen ever in our lifetimes. So it's just a number that's astounding. It's I don't know. I think it's an interesting also confluence of events right now when you look at the premiums that dealers are charging, because premiums are down as well as spot price. And a lot of people will say that spot price is manipulated. But last I checked, J.P. Morgan doesn't manipulate what the dealers charge for premiums, although there may be a story there for you if you can prove that they do. So since the banksters don't control premiums, you have to wonder, with spot price dropping, why are dealers also dropping their premiums? So it's presented, I think, and today something interesting happened, John. Today you can buy silver, and I won't name the retailer because just people can do their own research, but you can buy silver today with shipping and the spot price and premium combined for less than spot price was a week and a half ago. Unbelievable.
Yeah. Well, not only that, a lot of companies are now, even for orders 5,000 or more, charging or not charging, or actually giving you free shipping. The premiums are the lowest they've been in my opinion, I work in the industry in my day job, in 18 months. So, yeah, and that's the amazing thing. If this is so rare and hard to find, why is shipping free for a lot of orders now? You'd think they'd have to charge a lot of just extracting it,
Well, when I look at the premium issue, I mean, this year, it was, in the last year, we've seen 79 cents an ounce, which is more common than ever. We've seen 69 and 59. We saw Mike Maloney at 49 cents an ounce on his Pegasus rounds, either late last year or earlier this year. And again, without naming names, I mean, there's a place you can go right now. And the only reason I don't, by the way, is I don't know if you want me to promote someone else here. It's not someone I work with, it's just someone I know about. But there's a dealer out there now with 29 cents over spot. 29 cents over spot. That's ridiculous. I mean, I've never seen that. So if prices are low now and that's manipulated by bankers, how do you explain the premiums dropping?
Yeah, that's definitely true. And of course, all we heard about was there's a silver shortage, there's supply shortages coming. That's all you hear about. That supplies is tight everywhere. I don't want to name names because I just don't want to badmouth a company. That's just not how I like to do things. But I'm in the industry, so I hear a lot of the BS stories. But if there's really a supply shortage coming, why bother even selling it?
That's right. I mean, I've talked about in videos. In fact, I did a couple of videos last week where what I said was, if you believe that there's a shortage and you believe that the COMEX is about to default or force majeure around the corner or whatever, in all sincerity, not sarcastic, and in absolute hopeful praise of the people who believe this story, call your retailers and say, listen, quit selling it with these crazy low prices, and put a sign out in front of your business that says we're only buying because fiat is so worthless, and we'll take your silver, but we are not going to sell at these crazy prices. And if we do, we're not selling at 29 cents over spot. We're selling at $2.90 over spot, and that's for generic. So I just, this is the thing. Whenever I've talked about this over the years, and people have said that I'm somehow anti-silver or whatever. No, I'm not. I want people to have as much of it as they can get. But if you're asking me a question about the stories, well, I think you have to ask the retailers why they're selling with these crazy premiums. Because don't worry about what I think about shortages. What do they think? And apparently, they don't think much of it.
Yeah, I definitely don't see it. Like the company I work for, a couple, we're actually, one thing I'm allowed to say is there's not a shortage. If I wanted to find, in fact, I had 20,000 face. I could find that no problem. That's absolutely no problem. And the other thing is, I wanted to switch a little bit, is right now a lot of the silver miners are way below their cost of production. What's your view on that?
Well, I think the production cost story is one which applies to every industry, under all circumstances, and throughout all time. And sometimes you're going to be producing something that it costs more to produce than you'll make a profit on. And when that happens, a number of things have to occur. Either A, you have to make less and conserve, or B, you've got to weather the storm and sell at a loss. Or C, some people are just going to go out of business. I mean, I just hear these production stories like, well, they've got to get these costs back higher. No, they don't. No, there's all sorts of industries that when production costs rise, Adam Smith's invisible hand would dictate that someone's going out of business, or, and I may be being fairly loose with my interpretation of Adam Smith there, but generally speaking, someone ain't going to make it, and that's the way it goes. And sometimes there are industries where not just a year of production is underwater, but years and maybe decades. So I just, if you're looking for production costs to lead things higher, I think you're looking at the wrong metric there.
Yeah. Well, Richard Cantillon, who is a famous banker, is actually well liked in the Austrian school community. I actually read something with him a couple days ago, and he said gold and silver, like any other commodity, cost of production doesn't matter. It's a market-recognized demand. Now, personally, I do think there's demand, but
sure there is. Still, absolutely, there's demand. There's demand because industry more and more needs silver. Well, I don't know if more and more is the word, but certainly industry needs it. It's an industrial metal, and it's nice and shiny and collectible. And throughout history, people have used it as a storehouse of value, although gold more typically than silver. But those factors alone don't really weigh in on price. Not always. And what I find interesting is when people talk about price with respect to all these other metrics, I do wonder, why do people continue to value silver in terms of dollars, right? I mean, I thought it was all about the ounces, the number of ounces, and yet people seem very fixated on price in dollars. If that's what you're looking at, somebody may go out of business. In other words, if dollars they're making to pull it out of the ground is the metric, someone's got to go out of business or prices have to rise. But prices don't have to rise so your stack gets more valuable. See, I think people tend to think, well, because of these stories, it has to happen. Therefore, I'm going to make more. No, you don't. You could be sitting on a losing asset for the next 20 or 30 years. Talk to people who bought silver in 1979 to 1980, who waited around for 30 years. A production cost rose for the entire 30-year period.
Ah, that's interesting. I haven't looked that deeply into it, but yeah, that's definitely a excellent point. In cost of production, companies can go bankrupt. I actually had Avi Gilbert on, and he said that actually. Would you agree with this theory that he said that doesn't mean prices have to go up, but if it's going to cut into supply, the next bull run will be much larger because there's less of it.
I think that's valid. I think that there's a it's kind of like when you get a car at a car lot. If you get a loan, you need to talk about the loan, the interest on the loan, the term of the loan, the trade-in value they give you, the sticker price, any deals. And so when you go to a car dealership, they'll have all these different things that they have to kind of figure in their spreadsheet. And in the end, they're going to get their pound of flesh. So because there are so many factors involved with silver, it's very difficult, I think, to prophesy where prices will be because of one particular reason. But I think it's very noteworthy to say that if miners are making less money, and if some miners go out of business, and if supply shrinks because of that, and over time we do believe generally inflation is going to, well, someday raise its head, then we can suspect that two things will happen. Prices will rise, supply will be more limited, and when that happens, we could see a much stronger move up somewhere down the road than we saw from even 2010 until 2011. But do keep in mind there is one overhang, and that is all of the silver already purchased in the hands of stackers right now. A lot of folks out there at every level as it rises will want to start unloading. And I will tell you that when you look at stocks, there's the break-even point where the guy or the gal who buys, once they get back to break-even, they start selling. And you can look, and you can see, you can look at the volume people were buying at, and then when the price comes back up to that level again, they start dumping. And that usually will, pull the price of the stock down when that happens. Well, with silver, I think the same thing could happen. At about 25 to 30, there should be some heavy selling. From 30 to 40, there should be even heavier selling. But once those folks have sold, and supply at that time should be down from where it is now, in terms of production, well, you could see the next spike. So, I guess that's the long answer to say I agree with the person you mentioned earlier.
No, that was a definitely good theory, and you talked about outline, a lot of places where people bought at, and what I found the most interesting is before we talked is you do a volume thing, and you talked about the two types, the silver stacker, and I forget the other name, but would you be willing to go into that?
Well, I was actually going to record a video on this. Okay, here's the thing. Do you want me to explain?
Just the two types,
okay.
Briefly.
Yeah, okay. Well, there's the stacker, and they're never going away. And what it is for the last 100 years, there's been the person who has believed every conspiracy, whether true or not. I'm not even debating that. Okay, I'm not arguing whether they're true or not. But believed all the conspiracies and bought into the idea that you need to own precious metals because when everything collapses, you'll need precious metals and storable food and water and all that, and hydropower. And generally that person is wrapped up in the name silver stacker, or more accurately, for those people old enough to remember, okay, silver stacker is a term that did not come on the scene until about 2008. Scottsdale Silver came out with these bars that were stackers. They were, I think, might even be called silver stackers or something. If you go to Google Trends and search for the term silver stacker, you find out that really wasn't even used in the vernacular until about 2008. Before that, the general name was gold bug. So gold bug is this guy who's never going away. He will always buy. He will never sell. I'm not being negative. I'm just stating what I believe to be a fact. I don't think that particular person sells. But what happened was the silver stacker phenomena in terms of the YouTube and the internet and what I would call the mania phase is very akin to the country and western fad that hit America after the movie Urban Cowboy came out, probably in the late 70s, early 80s. If you're old enough to remember, you can remember when all of a sudden everyone you knew was wearing Wrangler jeans with 10-gallon hats and big belt buckles and going to bars with mechanical bulls. That fad lasted for a few years, and then Gilley's, the original bar where the mechanical bull was in the movie Urban Cowboy, I don't know. Last I heard, they were going out of business and there wasn't anyone going there anymore. But that fad came and went. And so their closets full of Wranglers and 10-gallon hats and Stetson jeans and stuff or boots right now. Silver stacker that came into the market from 2010 late all the way until late 2012. That time period is your Urban Cowboy stacker. They're gone. You're in the industry. Let's be honest. You know that fluff volume has been moved out. They're gone. But you also know there's a core group of people that will continue to buy. That's not stopping. But what is going to come back to normal are the volumes where the fad buyers are out of the market.
Yeah. Well, the thing is also is I can always tell when we're at a short-term bottom now, being in the industry, because every call I get is like, I want to buy a 2000 face. I want all dimes, nothing else. And, of course, the reason they want dimes is they believe Armageddon, and they want the smallest thing possible to barter.
John, can I interrupt something? Can I interrupt you?
Yeah.
I have a dealer friend of mine. This is very spooky. I have a dealer friend of mine who told me just in the last week the exact same thing. It's someone that you might not. I'm sure you don't know this guy. It's just a friend of mine. He said he always can tell when the fluff has moved on when people start calling him, asking him for dimes, silver dimes. He said it's a totally different type of buyer. And he says he's getting a lot of those people right now.
Yeah, exactly. I actually had some. They're like, I want all dimes. I don't want any quarters or half dollars.
That's exactly what my friend said. He said, and they want it because in the apocalypse, the story goes, you're going to want to have small amounts of silver to exchange.
Yeah, so that's when I know. In December, that's when I got all those calls. I was like, oh, we're probably near the market bottom because all I get is the dimes calls. So.
It's fascinating. What's interesting that you and this other friend of mine tell me the same thing. It's fascinating.
Oh, yeah. Yeah, that's actually the weird thing is that you've been in one bullion, you sort of know the clientele. You get to know it real quick, and a lot of people don't last that long because it's a different clientele than what people make it to. So, and one other thing, I wanted to switch metals real quick. Do you have any views on gold? Or is it sort of the similar story of silver that it still has another leg? It still probably has another leg down.
Well, I think that gold is one difference. More than one difference that gold and silver have. Number one, gold is the reserve metal, not silver. I mean, if you're looking for the metal that has the real monetary value, it's going to be gold. And if you look at the charts of gold in the same time period that silver ran up, so did gold, but not with as much volatility. Gold was much more just a steady climb. And the move down on gold has actually been very orderly. You had the move down from 11 until 13, and then 13 until now. These, kind of sharp moves and then sideways, sharp moves and then sideways. Long term, and this is, look, I'm not giving anyone in investment advice, so don't take this as investment advice. But long term for me, I think that gold probably has more value than silver. Now you could say, well, silver's less money or silver's got industrial use. Yeah, I know that. But if we ever go to a monetary base behind our money, it's going to be gold. We're not going to have some bimetal deal where silver and gold are both backing a currency. So if you're looking for something that's got the real long-term track record, it's got to be gold.
Yeah. Well, not only that, if you ask me, that's probably why China's been buying so much gold is because of the monetary uses. And I personally don't think it's because they believe the story gold at 10 or 20,000. I personally think it's just because they're hedging their dollar bets.
But see, I mean, please forgive me for taking a different side of that, but you're a young guy, and relatively speaking, so am I. Although I'm older than you, but we're relatively young. We're certainly young compared to China and India. And I don't know if people know this or not, but China and India have been buying gold since before the advent of Christianity 2,000 years ago. They were buying before the pharaohs in Egypt discovered it. I mean, these guys have been buying and stacking gold for literally eons. So to say that they're buying a lot now is to state the obvious. Now, it becomes more interesting when you look at what happens when they become net sellers. The most recent articles I've read have shown that China and India both are slowing purchases, and eventually, if you look at history, they become net sellers, and when they do, prices get absolutely destroyed. Now, I'm not saying that's going to happen. What I'm telling people is that the idea that China and India are buying, and that's indicative of a reason why prices will go higher, well, they've been buying forever. Sometimes prices go up and sometimes they don't. Look at what happened in the late 1920s into the 1930s. China and India became net sellers of gold, and when they did, as they always do at some point, prices got destroyed. Don't know it's going to happen again, but every time it happens in the past, prices get crushed.
Oh, yeah. If China did sell its gold, I would hate to see what that would do to the market. That would be, it'd probably create a great buying opportunity. Because once China unloads, there's no more sellers there.
Well, I know that a lot of people listening right now may say, well, China will never sell. India will never sell. Yeah, I know that's what we always hear they're never going to do. And I know this time it could be different, but I just don't find anything interesting in China loading up on gold. They've been doing this since before we had written language in Europe. So.
Yeah. So, and the other thing is, I actually wanted to ask you one other thing. As you were talking about fiat and all this, but Amagi Metals actually, I forget how to pronounce it. I just see them online. They're actually now in 2016 just accepting Bitcoin.
2014.
Or 2014, sorry.
Yeah.
What do you think of that?
About Amagi Metals accepting Bitcoins?
But no longer accepting dollars.
Oh! You're saying that Amagi Metals will not accept dollars at all?
Yeah, that's what I read. Actually, in fact, that was actually a big deal.
Huh. Okay. Well, I'm at their website right now, and let's see here. I don't see the word Bitcoin anywhere on their main page. So let me click on this silver and. I'm sorry. We accept
after 2016.
Oh, no dollars after 2000. Oh, well, that's an interesting marketing ploy. I mean, I'll tell you what. Here's the deal. Everyone listen to me right now. After 2016, I will no longer accept dollars. So pay with Bitcoins now. Okay, fine. So between now and 2016, I can get a lot of sales in Bitcoins and immediately turn them over into dollars right now, and maybe I will or maybe I won't accept them after 2016. I don't know. I mean, the issue of them accepting Bitcoins is not really that unusual, except for the fact that in the precious metal space, I thought it was all about something that was a hard asset. So I've been interested in Stacker, who doesn't seem to mind their gurus, and a lot of them now jumping on Bitcoin.
Yeah. I have a question. Which gurus, or you don't have to name names, so. I only follow like 2 or 3.
Which gurus what?
Do you actually see a lot of gurus jumping on Bitcoin, or?
Yeah. I mean, I see a lot of people in the precious metal space that at once keep on stacking at hard stackers. I'm kind of wondering if you're asking me a question that's almost a trick question, like you're kidding.
Oh no, it's not a trick question. I'll just say the only ones I've actually followed regularly are Sprott, David Morgan, and Peter Schiff.
Oh, okay.
None of them said anything like about positive about Bitcoin. So I was wondering if there was actually like former silver stackers that actually
just look at Mike Maloney on Bitcoin. You know, look at Mike Maloney's comment. I mean, I can't get any more stacking a stacker than that, right?
Yeah, that's true. Yeah.
Mike Maloney, Bitcoin.
Oh, okay. So, wow, there are. That's really, to me, that looks like sort of a contrarian bottom. So if they're willing to abandon, actually, a lot of bullion dealers are now marketing the collectibles.
Oh well, now you're talking about a whole different concept. What's been amazing is the story originally was you're buying to beat the system. You're buying to crash banks and all that. Then when prices fell, okay, now it's all about collectibles and numismatic value and premiums and flipping on eBay, and that to me is very reminiscent of what we saw with comic books and baseball cards in the 90s. And I think it's a predictable deal, but I do wonder about all the people that were buying because they thought they were crashing the system. How do you explain to someone that, okay, now that the system didn't crash, you should be buying because you like the picture on the front or because it's got a certificate of authenticity? I don't think that in the zombie apocalypse, which may come, by the way, I want to be very clear. People, when they hear me talk sometimes, John, they think I sound sarcastic. It's just, this is how I talk. I'm not sarcastic. I mean, maybe we will have the need to be trading with metals. Well, if we do, is it really going to matter if you've got, some limited edition silver, or won't you rather have something closer to spot price that you bought a lot of? I don't know. I'd rather have a lot of just plain old silver.
Yeah, oh yeah. Oh, I'm not a fan of any of those proofs or semi-numismatic things, I'll be honest. But one thing is, if it's alright if I switch topics, what's your view of the stock market right now?
Totally phony. Absolutely phony. I mean, it's just, when you look back at Hank Paulson and what Hank Paulson said in 2008, late 2008, when they were getting TARP money, the bankers were, Hank Paulson, then Treasury Secretary, said that they didn't know initially what they were going to do with the TARP money. And initially it was meant for toxic assets. Well, he said at one point they might use it to buy stock in different companies. And that's what they did. They used all their free extra floating around cash to buy stock in companies. And then, of course, the Federal Reserve did their QE program, and that pumped the market up a little bit more. So I don't see it has anything to do with actual Americans and the American economy. It's bankers pumping things up with QE. Hold on one second. I'll let my dog in. Hold on. Our dog out. Now, I don't know that it doesn't mean you can't make money in the market. I think you can make money in the market. But, I mean, I think you have to understand that it is rigged and it is phony. And, but much respect. Listen, much respect to the folks that pumped this thing up. I would not have believed we would have seen this sort of rise. Absolutely unbelievable.
Oh yeah, I definitely. What I'm surprised about is how they're able to pump up this stock market while they're keeping commodity prices in check. Now, since 2000, I believe that obviously silver's higher now than it was then, and oil's much higher than it was then. But if you told me they were going to pump a stock market this high and keep them at these prices, I never would have guessed it, and I'll admit it.
Well, I wouldn't have guessed it, but in retrospect, why would commodity prices rise? Generally, commodity prices are going to make a move, assuming people are using those commodities. Well, people aren't cash flush right now, and like in every depression, the money flow, the velocity of money into the hands of the people that would buy stuff, that commodities are the basic foundation of. If you don't have any money, the things that commodities make aren't going to push commodity prices higher because there ain't no shortage of them because people aren't buying them. So while the money is flowed into the phony Wall Street casino, which is what it really is, the money from Main Street, which buys the bread at the grocery store or the coffee or whatever, or puts the gas in the car, I mean, that money there's no velocity there. That velocity will pick up when the banks begin to loan money out again, and that'll happen after interest rates rise. So when they start raising interest rates, and they start giving loans to people just because you got a face, and the higher those interest rates rise, the more loans get pushed out, that's when commodity prices are going to skyrocket. And we're a cycle away from that. When that happens, we'll look in the rearview mirror at these prices. And also on silver and gold, too, by the way. I know people are maybe down about prices now, but just wait. Wait for those interest rates to rise, which people will initially think will push prices of metals lower. But in fact, as interest rates rise and banks loan more money and the velocity of money picks up, commodity prices across the board are going to pick up. And I don't think we've seen anything like a top in precious metals or any of these commodity prices. It's going to take a little bit longer than people thought, and for different reasons.
Yeah, I definitely agree. Well, I definitely concur with that now. I wouldn't have guessed, if you had me guess where we are, I wouldn't have been able to guess that, but it's definitely, I personally, some people think now that I'm taking crazy pills when I think that this gold correction could last another year and a half, and I just really think it can, just because right now the markets, they're just thinly traded. There's no one to participate, and I personally think there needs to be some sort of event to change sentiment or some sort of buying pressure. So,
well, I don't know what the catalyst is going to be. If you say, well, it's going to be a Federal Reserve thing, or well, it's going to be a shock around the world, or the dollar collapse, or IMF's going to reset the dollar, or something like that. I mean, who knows what the story will be? But whatever the story is, I don't even know that story is what's going to push prices higher. I think that stories are always going to be lagging. You're always going to look back in the rearview mirror and say, well, that's what we think caused it. But if that was the case, if the story was what pushed prices higher, why didn't quantitative easing push prices higher? $85 billion a month in QE? Well, the reason why is because the real story hasn't happened yet. That money is just money on balance sheets getting shifted around. Now, when you look at the money in the coffers of the banks, it's storing up for the real QE, and that's when the money comes flowing out into consumer hands. So, and that can't happen yet. See, and so whatever catalyst people are waiting for next, I'm saying you look in your rearview mirror and go, oh, okay, and you're going to want to zig when they say to zag, and vice versa. Which is why right now, as premiums are coming down and apathy is everywhere, and people like you're talking about are picking up dimes and not worrying about ounces anymore, I see from 20 to 12 as a buying opportunity, and I'm just kicking back and letting it happen. I don't really care what the story in the media is, by the way.
Yeah, all right. And one last thing is, what's your belief about Bitcoin? Not that it's money, or rather it's money or a store of value. Just do you think it has a future, or cryptocurrency has a future, or do you think it's like a modern-day tulip bubble?
Well, first of all, I think that if you go backwards, let's ask it a different way. Bitcoins, whatever the digital money that's coming next, for example, Ecuador, their government says they're coming out with some sort of digital currency. And they're doing it because they say they want to sop up a bunch of debt they've got and put in these currencies and pay off their debt with these digital currencies. Now, this is something that I talked about for years, which is that the ultimate hyperinflationary vehicle will be a digital currency, because you can have one, we'll call it a debt coin. They could create one debt coin, and then 2, and then 3, and then 4, and then 5, and keep sopping up debt. Forget debt ceilings. You won't need debt ceilings when they can just snap their fingers and make a new digital debt vehicle of some sort. So, if you understand that it's the easiest path for governments to cover over and pave over debt, and maybe even do it legally, just give the ability to create that to a central banking authority, and totally be within the framework of the law, not have to worry about raising debt ceilings, just constantly creating these new digital vehicles which soak up debt. Now you move to where we are now. So that apocalyptic inflationary scenario I just described, back it up to Bitcoin and the alt currencies out there right now. Well, we're in the age of digital money. Milton Friedman talked about this 20 years ago, and I'm sure if you watch enough Star Trek, this is not a new idea, but we're living now in the age when it's possible. But let's back up. Before Bitcoins, there was PayPal and all the other online payment systems where anymore you can buy and sell stuff and never have physical cash in your hand. But let's back up. Before that were credit cards. Let's back up. Before that were checks. Let's back up. There were Federal Reserve notes, which were simply the idea of money, not real money. Now let's back up before that. Silver certificates, for example, and gold certificates that were redeemable for actual physical tangible goods. But let's back up from there. Actual physical silver or actual physical gold, or read the Coinage Act of 1792 et al. And find out that copper also was a metal used for money. Now, so if you back it up and you stand back and look at the arc of time, ask me again about Bitcoins. What do I think about them? Well, they're nothing new. They're part of a long chain of events that is leading in a very particular direction, and that is less tangible value and more ease with which governments, etc., can find some way to cover up debt. And that's it. And you can tell me that Bitcoins were, made by programmers, or you can say that, bankers are behind it or whatever, but the effect of these things is just another step closer to what's been in the works for the last 200-something years.
Yeah, I definitely haven't heard that, and I gotta say, I actually never really bought into the story just because I don't see how these little computers changing digitally can defeat the banksters, and I just didn't really.
Well, you can't.
See
well,
that.
I mean, you can't. The thing about Bitcoins is that, to have the philosophic conversation and say, well, are they a good thing or a bad thing? There's that conversation, and that's one that we could talk about. But then there's the other conversation of practically, are they any good? Do they solve problems that we had? Do they make more problems we don't need? And then there's the third question, which is, are they or something like them going to exist? And I would say that we can debate all day long whether they're good or bad philosophically. We can debate all day long whether practically they should or should not exist. But I don't think there's any debate. They're not going anywhere. The digital money train left the station. You might argue it was horses in blocks before a race, and the race is just getting started. But they're not going back in. And no matter what people like or don't like about them, on either side of that equation, your opinion really doesn't matter. They're just not going anywhere.
Yeah, I was actually mainly talking about the story, so sort of like similar to the silver. How it was, I remember reading in December how Bitcoin was an enemy of the bankers and the states, and this could free us. I actually saw a story, cryptocurrency anarchist and everything. So, well,
I would say that anything that bankers can buy on open exchanges, or they can create with computer power that you'll never, ever have on your own, or they can, if they can't mine them, they can buy them. They can manipulate them the same way they can manipulate everything else. So I don't know. Seems like the perfect tool. I mean, if I was a banker and I was trying to find some way to control a financial system, what better way to do it than with something that's trackable, online, digital, made with zero. In fact, I'll tell you, this is a first. I'm going to give you a first right here. I'm telling you, within the next year, a major banking institution will come out with their own digital currency. Now, that may not be news since Ecuador is saying they're doing it, and this is probably not earth-shaking news, but the part about this I think is going to be interesting is when it's sold, and part of the selling point will be that it costs so little to make. Printing cost, minting cost, no cost to deliver from one person to the next. It will be sold as a cost-saving measure. And if I'm a banker and I have a way to get funds across borders that ignore international laws, why wouldn't I like digital money? I don't know. I don't see how bankers are afraid of it. I'm not saying bankers are behind it, because there are certainly people who make that argument. I just don't know what they're afraid of, especially when the Federal Reserve and the DOJ and the SEC and the FBI have all said they're all right with it. And the IRS says that they're going to look at it like a commodity and not money. Seems like a windfall for governments. So I just don't see where But again, see, that's a conversation that to me is also irrelevant because they're not going anywhere whether you like it or not. So we could talk about that for the next 3 or 4 days, and at the end, they're still not going anywhere.
Mhm. So I just want to thank you for your time, though. It was a nice conversation. It was definitely nice having you on. So.
Well, man, I appreciate you having me on. I've said this so many times. I'm just some guy. I play guitar. I'm just some dude, and if what I say resonates with people, great. But there are people out there with much larger platforms who do a much better job of talking about these things. And the thing I want people to do is just look into stuff, think about it, read about it, and do the best you can. I mean, one thing that's personally been sad for me is watching people who they end up putting themselves in positions because they haven't researched something to where they feel like they're constantly behind the 8 ball. You know, they're constantly losing. I would hope that people would not do that. Start researching what you do, and in the end, and John, this is going to sound very basic, but in the end, you can only do the best you can do. Don't beat yourself up. Don't give yourself a hard time. If a story you believe comes true and you made money with it, great. If a story you believe didn't come true and you lost money, do better next time. But don't get down. Life is way more than money. It's way more than bitcoins. It's way more than gold and silver. Live your life the best way you can. Love the folks you're spending your time with. Love every moment of what you do every day. Do your best. And at the end of your life, you're not going to be clamoring for more gold or silver or money or bitcoins, but you will want more time. So if I can help anybody get their priorities straight, it would be get your time. Take your time back. It's the one thing you can't get more of.
That's a great statement. Yeah, time is very valuable. So, and if people want to find out more about you, how can they do so?
Go to Yahoo and read about Nicki Minaj and tell her I said hi.
So it's also YouTube channel, The Day Trade. So
yeah, if you want to, you can visit my YouTube channel. It was an honor to be here. I'm always honored and feel very privileged when people have me on their channel because, again, I'm just some guy. But thanks for having me on, and if I can do something for you in the future, let me know.
Thank you.